Okay, hello everyone. Once again, welcome back to our class. So even today, we are going to discuss a very important topic for your exams and even for any kind of competitive exams, okay? We will discuss commercial banks and its functions. Now, what is a commercial bank? The word commercial itself is relating to business, that is to earn profit in future, and bank is a financial institution that accepts both deposits and give loans. Okay, so a commercial bank is a financial institution which performs the functions of accepting deposits from the general public, that is us, and giving loans for investment with the aim of earning profit in future. Okay, some of the examples of commercial banks are Punjab National Bank, Allahabad Bank, Canara Bank, Andhra Bank, Bank of Baroda, and even SBI is a part of commercial banks. Okay, keep that in mind. But remember, all financial institutions are not commercial banks if they do not perform dual functions. That means two functions. One is accepting deposits and two is giving loans. Therefore, post office are not commercial banks because they only accept deposits from general public and they do not give loans to others. Okay, keep that in mind. Now coming to the functions of commercial bank, first we will discuss the primary functions of commercial bank. One is acceptance of deposits and two is advancing loans. Okay, so first we will discuss acceptance of deposits. Acceptance of deposit means accepting money from public. Okay, a commercial bank accepts deposits from public in the form of current account, savings account, and fixed deposits. Now, what is current and savings account? These current and savings accounts are mostly held or opened by a common people like us. Okay, whenever we go to ATM to withdraw our money, we always get an options either current account or saving account. So that is a current or saving account, which means we can withdraw our money anytime until and unless we have money in our account. Okay, and fixed deposit account. These fixed deposit account are mostly held or opened by an entrepreneur or a businessman. Okay, under this fixed deposit account, one can withdraw his or her money only after attaining the maturity date, that is only after a stipulated time period. Okay, so we will also discuss in brief demand deposits and time deposits. Now, demand deposit means when deposits can be withdrawn on demand by depositors, that is by us, by issuing a checks, are called demand deposits. That means under demand deposit, it is a kind of money because under this demand deposit, we can withdraw our money whenever we want just by issuing a checks. Okay, so this is also a part of money supply because when we say money supply means total amount of money available with us, isn't it? And demand deposits are highly liquid. Highly liquid means it is a kind of money because like I said, under demand deposit we can withdraw money anytime just by issuing a checks. Therefore it is highly liquid, but under demand deposit we will not get any kind of interest rate. Okay, keep that in mind. Next is time deposits. Time deposits are also called fixed deposits or term deposits. Under time deposits, one can withdraw his or her money only after attaining a maturity date. That is only after a stipulated time period. Therefore, time deposits are not a part of money supply and are less liquid. Less liquid means we cannot withdraw money anytime, isn't it? Therefore, it is less liquid and are not a part of money supply, but under time deposit, we can withdraw our money after maturity date along with the rate of interest. That is the bonus point. Okay. Okay, point number 2 is advancing loans. Advancing loan is also a part of primary functions of commercial banks. Advancing loan simply means giving loans to others. Okay, so the commercial bank give loans to particularly to businessmen and entrepreneurs, and thereby they earn a rate of interest from there. Okay, now remember, when we public deposits our money in our account, the commercial bank keeps some as a reserve which is issued or ordered by RBI, and from there they used to give loans, they used to lend to others in the form of cash credit, demand loans, short run loans, overdraft, etc. that we will explain now. Okay, so these two, that is acceptance of deposit and advancing loans, are considered as the primary functions of commercial banks. Okay, next is discounting bills of exchange or Hyundais. Now, what is discounting bills of exchange or Hyundais? This is a bill of exchange represents a promise to pay a fixed amount of money at a specific point of time in future. It can also be encashed early through discounting process of a commercial bank. It is a paper signed by the debtor and creditor. Debtor here is us who is borrowing, and the creditor means who is lending to us for a fixed amount payable on a fixed date. So let us explain this in more details. Now, what exactly is discounting bills of exchange or Hyundais? This is a practice among wholesale buyers and sellers. When the seller sells goods, he fixes a time period, normally less than 3 months, when the buyer cannot make a payment at that particular point of time. So here, both the seller and buyer will make an agreement. They will sign all the paperwork, and the seller, on behalf of the buyer, will approach bank for a loan against the bill of exchange issued by him. The bank deducts some amount as interest from the payment from the amount mentioned. In the way, seller has no wait for the payment. The bank now takes the responsibility of collecting money from the buyer. Now, this I'll explain with the help of an example. You see, here there are two persons, Mr. A as a wholesale seller and Mr. B as a wholesale buyer. Now, Mr. A sells goods that worth of rupees 10,000 to Mr. B. But Mr. B is not in a position to pay rupees 10,000 to Mr. A at that particular day. So what they will do is both will sit together, they will make an agreement, they will sign all the paperwork, etc. And Mr. B will promise that he will pay back within 3 months. So now Mr. A will approach the commercial bank, that is say Canara Bank, and he will share all the details what Mr. A has discussed with Mr. B. Now, the Canara Bank, that is the commercial bank, will agree and will pay on behalf of Mr. B to Mr. A. But remember, the bank will never pay the full amount. Therefore, the bank will pay only 90%. That is, they will keep 10% as reserve, and they will pay the remaining amount, that is rupees 9,000 to Mr. A. In that way, Mr. A has to wait for Mr. B to make the payment. Now, after doing that, Canara Bank, that is the commercial bank, will call Mr. B. They will again sit together and they will discuss, they will make an agreement, they will sign all the paperwork, and Mr. B will pay those rupees 10,000 to the bank, that is the Canara Bank, within 3 months. And that is the responsibility of commercial bank to collect on behalf of Mr. A to Mr. B that rupees 10,000 from Mr. B. I hope that is clear, right? Next we have overdraft facilities. Now, an overdraft is an advance given by allowing a customer keeping current account to overdraw his current account up to an agreed limit. It is a facility to a depositor for overdrawing more amount than the balance amount in his account for a short period. Now, overdraft simply means allowing a customer to withdraw money though he has a zero balance account. Or in other words, we can say overdraft means allowing a customer to withdraw more money than he actually has in his account. Now, under these overdraft facilities, everyone can avail this opportunity until and unless we have our account. That means even the ordinary individuals like us, self-employed business, etc., can avail these opportunities. But in reality, we have seen that these are offered only to those with salaried people or employees who hold salary accounts. That means, in reality, though it is offered to everyone, in reality, we have seen that these facilities are given only to those who hold a salary account or who employees have salary accounts. And these are only for a short time period. Keep that in mind. So what you have to remember here is overdraft simply means allowing a customer to withdraw more money than what he actually has in his account. That means even if in your account you have zero balance, but you want to withdraw to 2,000 or 3,000 or whatever it may be, then in that case you can approach your bank to avail this opportunity and they will do what is necessary to be done. Okay, I hope that is clear, right? Okay, and next we have agency functions of the bank, and lastly we have performing general utility analysis. Okay, so see, these two are quite simple, so I request all of you to go through these two functions, and if there's any doubt you can ask me anytime. Okay, thank you.